Great. So we're ready now, are we? So good stuff. Okay. So good morning, ladies and gentlemen, and esteemed guests and viewers on YouTube. Welcome to the 43rd Coffee with CEO. I haven't done them all, by the way. At the Incubation Centre here at Amity University, Dubai. My name is Gary Smith and I'm the head of the Incubation Centre. For those new to this, the Coffee with CEO gives an opportunity for our students to see real people who do real jobs in industry and don't talk about it. They actually do things. So before I introduce our wonderful guest, I had to print this out because it's the best bit of news, I think, with one of our guests I think we've ever had. Last week, His Highness Sheikh Mohammed has established the Dubai Virtual Asset Regulatory Authority, VARA, linked with Dubai World Trade Center, and confirmed that Dubai and the UAE is positioning itself to be the global leader in virtual assets and the key player in innovative technology. So I already congratulated Mohammed Mahfoudh for being in the right place at the right time. So there's always an element of luck in business, but obviously this news is fantastic for you. And without further ado, I will introduce Mohammed Mahfoudh, who is the CEO and founder at, is it Deca4? Mm-hmm. Deca4 Advisory, which is obviously in this industry. So
thank you.
Over to you, sir. Just a quick journey of how you got here into this industry and the key points that you're doing now. I mean, you've already mentioned a few to me, but it's a very, very interesting subject.
All right. Well, thanks for having me. It's a pleasure to meet everybody. And guys, please feel free to ask anything you want. So I've been, of course, I work for companies and some government, but most of my professional career is in startups. So I did my own company in 2000. We're the first to create a cloud-based real estate software. And when the internet was still not there, and it was a very good success. And we had lots of issues, which led me to my next phase where I became an advisor for startups, mostly in Europe. I've lucky or, by chance or by design, I work in almost every continent, in Europe, Latin America, Australia, North America. So I've been around for quite some time in different places, and that definitely has been very valuable in terms of exposure to different ways of doing business, different behaviors, different people. But that's where I spent all my focus, setting up companies, working with young people like yourselves, growing these businesses, and something that is commercially is very, very viable, very rewarding, but also personally it's a very interesting domain. I focus mostly in technology, but of course we did few things here and there in aviation and manufacturing, but mostly in technology, and always looking into the trends where new things are happening and taking an early jump. And that's based on a very basic fundamental that when I enter a market or an industry that's just at the beginning, I have a chance to be a big player in that industry with a low cost and low resistance. So now Deca4, which I set up about 3 years ago. I was doing lots of your work in Europe, investing in startups, structuring them and taking them to the US. And then 2017, I came back here and refocused. And 2017, Dubai was a hub for something called ICOs. I'm sure you guys are, the initial coin offering, and it's just like going crazy, and people are, raising millions for anything. So I started on individually advising a few of these. And while doing it, I realized, when I was advising startups, my compensation is, payment plus equity. Now that equity is stuck in these companies. If I need cash, I cannot sell that equity because these are private companies. And if they are small companies, there is no way to exit. You have to wait for the management to find the exit. So when the tokenization and the ICOs was happening, and Dubai was a hub, and some of the major players in the industry were they actually started in Dubai, developing certain concepts. That was around 2018. And said, okay, it will be very nice if these equities are in the form of a token. And that's where, at that time, people were starting talking about something called security tokens. So I don't know how much you guys are into this domain. It's like, okay, this is brilliant because if my equity is a token, and theoretically a token can be listed, and then I can decouple my ownership from the company, and I can sell my equity like a public company without being in the public domain, that will solve lots of startups issues. So we started doing that, and then the market just plunged. 95, 98% of the ICOs market just went bust. And the whole crypto went into a very long winter. You guys are a very depressing period. But what was happening during 2018, 2019 is you have lots of projects that were, whatever, the term could be scammy or very shallow, and some were very serious. So the serious people took the money and developed. So 2018, 2019 was a period of developing of lots of protocols, lots of very interesting projects from, layer one protocols, Cardano, Hedera, Solana, whatever, and that's even companies like Polygon, Matic previously, and Polygon now, Avalanche. So that period, these people took it to develop. And 2020 came, COVID, and COVID in a way was, sadly to say, good for the crypto because then people, sitting at home doing nothing.
It was good for Teams and Zoom and other companies that online.
Technology usually. So then that saw another, grow in that industry. We were there now for us because we started the company to provide consultancy for security tokens, which means our clients are traditional businesses, medical company, real estate, and whatever traditional businesses that they want to tokenize their equity. COVID impacted us badly because our clients just stopped. And like, what, we have other things to worry about than tokenizing. And, so then we decided that let's go beyond the security token and just develop a tokenization practice. So what we're doing, we're providing end-to-end consultancy to anybody doing any type of token. Security, utility, NFTs, metaverse, and whatever it is. And we took the approach because when I was working in the industry, most people just do it. They don't look into legal side. They don't look, is that okay, not okay. They don't look at the brand impact. If they are a big company, especially young people, not necessarily, but people like, okay, let's just do it. Sometimes that's the right approach, by the way. And we tell even some of our clients, just do it, and then we'll see what the regulators will look into it. But it's very important to know what you're doing. So what we have done is set up that practice where we bridge the traditional business to this new crazy universe. So we have a way that we can talk to the well-established businesses and make them understand what tokenization is. And for us to do that, so we need to have basic formulas. So, you need to know finance. So we have a group of financial analyst team, and most of them are in Colombia. So my team is distributed all over the world, and that's another model that I'm being challenged every day as like it's working for us, and we're gonna keep. So we hire people wherever they are. It doesn't matter where they are. And we have somebody in Latvia, some in Ukraine, unfortunately, and we have some in India, and Mauritius, and Philippines, and Colombia, and Brazil. So in different places, and it's working for us. But we're focusing on certain skill sets. So we do that financial modeling, the legal review, understanding how this thing that we're trying to do relate to the real world. Now, from the conceptual things, like I saw a problem, the problem is that tokenization was happening. We looked at the technology, coming from a technical background, was no-brainer. You look at the blockchain, it's like, wow, this is something. Now, and see where it will go. So usually when we always do startups, I'm sure you guys are teaching them that you look into where the money is going to be, not where it is today. Because it is where the money is today is a very competitive market. So for me, for example, to set up a traditional business, to do consultancy for traditional business, very competitive. Everybody's doing it, and there is no value. But for me to do consultancy for something that is still not there yet or being developed, I created a good brand globally with nothing. So we are very well recognized within the community in a global scale, especially in the security token, because it is more linked to what I used to do. So an equity investment, now it is a token that represents an equity. So as a general advisor, I always tell people it's sometimes good to copy a model that is working somewhere, but you need to know your competitiveness abilities, and if you have the right funding and everything, you can enter an existing proven industry. If not, sometimes you need to look into something new. For somebody in my age, is a bit risky, and people always, my network saying this is you're taking a gamble. So now when I did in 2018, entering into the tokenization, it's nothing like now. Okay, it was really, even the people in the industry, they were telling me you're taking a gamble by focusing on security tokens. You should do crypto trading, buy Bitcoin, sell Bitcoins, Ethereum, and just like what everybody is doing. I said, no, that is again, everybody is doing it, and there is a value there, but people want to do that, want to do tokenization, want to understand. Maybe MIT University is like, okay, what can I do with that? So, I can build that track record, make them understand from a legal, financial. Something we do, for example, is a brand impact. For well-established organizations, create an NFT. The first question is, how is it going to impact my brand? Like for you guys, you could do whatever you want to do. It doesn't matter because you're creating a new brand. So you can establish. But imagine, Tim Horton or NFT or an established organization. There are areas that needs to look into. So we evaluated what is going on, said, what, this is definitely going somewhere. It's difficult to predict what the direction is, but certain parameters were there. It's like, I want to be in an industry that is almost zero, where when it grows, I'm there. And as I said, we're truly lucky in a way, but also we have been planning. Nobody, of course, expected where things would be, but we knew things would progress in a certain direction. So I entered an industry that is zero, literally, when I started, and it was growing. Why enter? Because it made sense. And what I offered is the services that I can deliver. So, and setting up a company, said, okay, number one, people will need guidance. So I can provide that guidance. We have that background of setting up, working with multiple companies. I can put a business plan, which is a mix between a technical white paper and a traditional business plan that most of the people in the industry don't do. So look into that direction, built up the team around it, where we have legal, financial, technical. I have an artist who's specialized in NFTs. I have people who are putting money on Axie Infinity and playing these games, and part of that ecosystem, and then taking it and make it clear to the well-established organization. So that's where we are. It's a very exciting time. This news is very interesting, what happened in Dubai. So this is, so Dubai is planning to set up a special zone for virtual assets, and the objective is to make it a global. So you guys are in the right place as well, because in the next couple of years, this is the market. Now, of course, this is one small industry compared to everything else, but I look at that small industry and the high growth. This is like exceptionally high growth industry is kind of easy and not that easy, but easier than other industry to enter in. So it's like, if I'm gonna be specialized on that, whatever it is, I could be a technical area, I could be looking to business consultancy, people will need guidance how to do that. NFT market is gonna collapse, so everybody should be prepared for it. But when these things happen, then development starts. So when it's a bull market, people are busy buying and selling, they're making money in the trading. When it goes down, you're like, okay, let's take a step and develop. NFT technology needs lots of development.
So you see that, like the ICO industry, it's peaking too early, not enough regulation, and you would see NFTs not explode, but I find it very exciting talking about NFTs with students and other people. But do you actually see that market the way that you saw 2018, is the way you described it?
So 2017 was very strange because, and Dubai was very strange because, and I tell people I live in two parallel universes. So I go to an event where people are raising 20 million for a ridiculous idea, dollars. And then I go back to my, few kilometers outside of that area to my normal people who are trying to raise, let's say $500,000 for a, proper technology company through equity raise. And I'm going that struggle, like just these people literally raised $20 million for some paper. So that was 2017. Now, of course, you see it's like, this is not sustainable. And some of them make sense, some of them don't. So what happened, people like, oh, that's an easy way to raise money. And they did. Some they did, and some people like they caught up late. So they start around mid 2018 when the market collapsed, and then it brought everything down. If you look at the NFTs, there are interesting concepts. I'm not only talking about technology. There are interesting concepts, and there are some silly ones. So the silly ones, and people are jumping to create, the speculators in the market want the quick money. They don't look into any fundamental, whether it's technology, market, and things will develop and disappear, but they will create, they will keep something that, you can pick up, whether it's a business model, like the example of Axie Infinity, they've made mistakes. So when you study that model, a game that's changing the GDP of Philippines, for example, that's how serious this is, this thing is. But it's not a game. It's not really interactive. It's not exciting. And now we're seeing in that area and the gamification, for example, where the 3D, these Fortnite type of games, the full graphics blending into this and trying to figure it out. Fortnite, when they did NFTs, they lost market because their user base did not like what they're doing with the NFT. So it's not a simple transition, easier for new entrants. So yes, we'll see. I think I could be totally wrong, so don't quote me here, that NFT reach a level of a bubble, very, when you see too many things that don't make sense, like, okay, there's something that's going to happen. Now, it doesn't mean it's a bad industry. It's going to change. And then the whole area of regulation. What is an NFT? To me, an NFT is a title deed. It's a proof of ownership. Now, some people are creating NFTs to represent assets. A house, a car, that's an asset. That's regulated. And they're doing it because NFT is not regulated. So NFT, I mean, this is where we go deeper. NFT, just the technical terms. What is the NFT representing is what matters. So if it represents a physical asset, a physical piece of art, okay, how do I treat it? Now, art is not considered an asset or a commodity, but let's say it represents 1 kilogram of copper or gold, which is a commodity, or it represents a piece of land, okay, through a contract. So that's now we're talking to a regulatory or a regulated asset. People are ignoring that part. We're saying, you know what, you're ignoring it now. Regulators will wake up. Already in the US, for example, they are trying to make every NFT as a security. So these kind of distinctions, I don't know what's the right context to talk about it, but these are where we see where the market is gonna lead. So when I know that this NFT, even utility tokens, will be more regulated in certain areas, so I prepare myself. I don't say the market is bad, I need to exit. No, I want to be in. So for example, just simple thing that we do every utility token and NFT, we make sure we do the KYC for it. That's a not normal practice. Why? Because today you don't need it, but I know in the future you will need it, so be ready. So you're not surprised when the regulator asks that every transaction you do, they have something called like the travel rules, for example, where you need to have the sender and the recipient information. Do it now, be prepared, build up your plans for the future and have it ready for the current. So it's a mix of always looking to where the things is moving. But overall, it's exciting. UAE, Dubai in particular have made this announcement. And the plans, if we understood it correctly, don't quote me, the law is out there, it's in Arabic right now. I can share it if you guys have fun reading some legal material. But they are defining beyond security tokens. So today in UAE, ADGM already has a security token law. They have been issuing some security token. So security token representing some sort of an asset. Could be a commodity, a real estate, financial. Then you have DIFC, DFSA, mid 2021, I think they released the security token, and now they have a discussion paper on all type of crypto. So, the different type of tokens. So that's also the IFC. Emirates Security and Commodity Authority also has, issued a law. Applications are still not there. These kind of things are very complex for regulators to, and it needs the ecosystem. But the good news, this is happening. You're at the early phase, so going into some sort of that direction, in a year, 2, 3, 5 years, this is a market that is the existing people probably will not have an idea what does it really mean. Many companies will be taken by surprise, and it's a new phenomenon. So it's an exciting time for everything.
Well, I think people who've been to coffee with CEO before have never seen me this quiet. Because it's absolutely. Yeah, no, normally I'm having to fill in. I could listen to you all day. I'm fascinated with the tokenization. So do you think that the tokens will sort of get in the mindset of people who aren't into this industry because it's associated with something tangible? So instead of, say, having a bill of rights or a piece of paper for that land, that you'd have if people get their head around having a digital or a digital token for it, you think that would be the game changer for people? Because I think most people looking at NFTs see the monkey head that he showed me.
Which one?
Yeah, that's the one, isn't it? And everybody thinks, who would buy that for $500,000? Yeah, and you think that's madness, complete and utter madness. However, it's not that monkey's head that is the key to it. It's these applications, isn't it? Do you believe that having something that everybody can understand associated with a new technology will help it?
Okay, so I don't know how to say this correctly. So, I mean, age does matter, of course. I mean, we are in the different categories.
So, we were around when .com bubble. .com bubble. Yes, that's the older version of the market crash.
Exactly. I was proposing to Barnes and Noble in '95 to do something online.
Yes.
For that.
By '99, it had gone.
Yeah. So yes, I mean we've seen it, and you see the trends happening. So to answer you, so why I say that there are existing economy, and one thing that we say that what we do, we transition Web 2 to Web 3. You guys will understand what Web 3 is, where whatever token. So we take existing companies. So we're working, for example, the largest sport portal in the Arab world, more than 40 million unique visitors a month, purely in Arabic, to build up a Web 3 piece, and that Part of it, some of it will be linked to physical assets, some of it will be new, totally new, because now you have this Web3, which is basically adding the dimension of value. So the internet gave us the information highway, now we have the value component, and that's the token concept and incentivization. So yes, there is a group, that's what we call the security token part, where real estate tokenization, assets, gold, we're doing that, lots of these projects in Africa and Latin America, copper mine, diamond mine, tokenizing. Why they're doing it? Some of them, they think that tokenization will bring money, which is the wrong assumption, because it's just a tool. The underlying, in that particular thing, the underlying business is remain the same. If you have, so we're tokenizing an equity in a company, Brazil. If the company is not good, nobody will buy their equity or token. So it doesn't matter. But why they're doing that? This gives them what we call it the tradability. So a token has a promise, and we have to have quote unquote, an underlying liquidity is still not there, but it's built up. You never, so when you look at, when I discuss with anybody, they're saying, if I tokenize, an equity of a company, there is no liquidity. I said, yes, no liquidity today, but in a year or 2 or 3, we know that it will happen. Why do we know it will happen? Because in the last 2-3 years, what we have seen regulation coming up, governments are not stupid. So almost every regulator from Germany, Switzerland, Austria, UAE, US, they're building the regulation. So it's like something has been building up. The pieces are being built, the different technology, tokens, platforms, KYC technology, listing exchanges. They are disconnected kind of, that ecosystem is not yet complete, but it's getting built up. So I'm going to build up something that I am ready for the next 2 to 3 years instead of then I start. Now it is a little bit more expensive in the development because new thing, but less in the marketing. So if I tokenize my equity, let's say your startups, you could tokenize the equity in your startups and be ready for the future, which is going to happen in a year or 2. So what will then happen? The investor in your company who is investing through a security token, in a year or 2, you will list that token in an exchange. So let's say you invested with them, you can exit after a year or 2 instead of waiting 5, 6, 7, 10 years. That makes a huge difference. So if people look at it from that aspect, yes, people they think they want to do tokenization because magically it brings money. I was like, okay, no, chill. It is not, it does take, but put a 3-year plan. Okay, we invested in companies and the average exit time is 7 years. So you gotta wait 7 years, 10 years, sometimes longer before you can exit. Now this one can give you an accelerated path. You have to see where things are and where things are going. The other type of tokenization, the non-security, the NFTs that represent art, the board apes, or all kind of variations. Some of them have interesting use cases. You will see things that come up that didn't exist before. Like all the social media happened because of the internet. I mean, before social media, what did we have? So
we did that, didn't we? We met each other and spoke at networking events.
So that created a new industry, right? I remember in the days, before you guys were born, when I was telling the internet would change the advertising industry. And I remember having this discussion. They said, no, advertising is advertising. But it did. Now the biggest advertisers are Google, Facebook, so this is going to change. So people are doing tokenization because of linkage to assets. The main reason for them, other than they think it's money, fractionalization. The concept that I take a big piece and I break it down. So if I take a piece of land that's $1 million, for example, and I create 1 million pieces, if the regulation, the technology is there, now the regulation needs to allow it. Then imagine you have a piece of, 1 dirham or 1,000 or 10,000 in a land where your fractional ownership is independent of the others, where you can sell it independently. You don't need, now today you could do syndication, but that means that all the owners have to agree. So imagine if you take a fraction of an apartment and you sell that fraction at whenever you want through an exchange. So that's where these things will lead into. And Dubai is actually doing something with that domain. I think it will be one of the leading jurisdictions to allow that. So fractionalization, the idea is that allowing even the students to participate in the real estate, younger population or people with low income to participate in big, opportunities in companies. So that's one of the key promises of this, I think.
Yeah, I was thinking about this because there used to be, these people probably would never have heard of it, but it used to be called timeshare.
Yeah.
And you would buy, and this is where people were being sold the concept of a week or 2 weeks within the 52 weeks of the year where they could go on holiday anywhere that they had these block of properties. And it was quite popular back in the day. Now, I thought the other day, this tokenization could be like a fantastic version of timeshare where you could go to resorts, and if it's timeline, because you were talking about timelined tokens and timelined, if you had, the dates or 1 week in the year, or you've got 3 months to use it, you can use the facilities of that. Is that possible?
Yes. Now, what is the issue with timeshare without tokenization?
Scamming, wasn't it?
No, it's not. The issue with it is, let's say I have 1 week, whatever, I don't know, mandate or now I needed the cash. How do I exit?
You never could you, in the old days?
Well, difficult even now. Even if they allow you, you need somebody to find something. Now, imagine you take that 1 week of timeshare and you create a token that represents it, and whether it's security or utility, there's discussion and dispute and debate, but you can create some sort of a token, and that token gets listed in an exchange. So all of a sudden, you have a possibility of an exit. Now, it's not a guarantee. That's where, when you design a business, you need to know where things are and where things will be. And you plan for the next 3 years. So today, if you tokenize timeshare, you will not have that liquidity. But in 3 years' time, if somebody do it, 3 years' time when that regulation is there, the ecosystem is built, then not only you can participate in a timeshare if you want to use it, but if you don't want to use it, then you can sell it. So now the concept of token, where the introduction of this value dimension to the internet allows that tradability, allows that exit. So these are where, if you design a business, you design it, okay, what I'm capturing now, because even if you do a tokenized timeshare, you need time to convince people to build up that momentum. And by the time, a year or two, regulation, technology would allow that exit. So imagine you go to these time-sharing companies and say, you tokenize it, so the people get the same benefit that they're doing today. So no change, stage 1. Stage 2, you list it. Now that's by itself is a long story. So, but let's assume you manage to list it. So you provide liquidity, you provide a potential of exit. We quantify that. So if I tokenize an equity for company, you're not, all of a sudden in NASDAQ. You don't have that liquidity, but you're private. So we give it 15, 20 to 30% better liquidity than you're private. So if I invest in an equity in one of your companies, it's totally private. There is no exit in a way till you guys decide to exit. If it is a token, it's kind of 20 to 30%, better liquidity than, but it's not a public company. So it's not like that, access to that capital. That's why people compare tokenization to a public company, to NASDAQ. They tell you NASDAQ has liquidity. Yes, sure. It's a 100-year-old company. Of course, they have, and proper regulation. So this is a new thing. You're getting into that incremental stages and said, okay, if I build up something that I mentioned, where will it be in 2 or 3 years? If it is something that you believe it will, this is a great industry. Timeshare is a good example of potential tokenization.
I don't know if it still goes on, does it?
It is, yes. Yeah.
But it was always considered like people would go on holiday and find a job as a timeshare salesperson. So they would literally speak to holiday makers and sell them timeshare. It was probably, people never, it was like used car salesman. However, lots of people did buy into this concept of
still exists.
That week or 2 weeks during the year that you could go anywhere in their stock of properties.
Yeah.
Maybe we could set up Dubai timeshare.
Yeah. It's one of these concepts that
Right.
now you add the timeshare to the shared economy. So where the new generation are no longer or less interested in ownership than use utility. So like the Airbnb concept is more interesting in the utility of the space than the ownership of the space. And you add to it the fractionalization. So I could have a fraction of it. So the timeshare concept where you're not owning with the timeshare, you're having an access to utility. So that is linked to the shared economy concept, just the tools are not, so that's why they're targeting timeshare to, retired people or, however, if it is fractionalized and tokenized, it might be used by everybody as a concept, it can work.
Yeah, because the exit strategy is there before you start, because it's a bit like buying insurance or things like that in the past. There's no way of getting it out. And I'm very interested in the equity with investment, because that's the one thing that investors, if they're not massive VCs, is that they put the money in. But of course, if only have a minor amount of equity in the company, unless you've agreed so many years before someone can exit, they sort of never can unless they've made money or you cash out.
It's average 7 years globally, and it's now taken longer. So it's normal to wait 10, 12, 13 years. And that is one, like here in the Middle East, the angel investment is very challenging. Probably this one of the concerns that you have because of the exit. In Silicon Valley, angel investors are incentivized from the VCs. So the VC comes in and buy out the angel investor. So they make money. Here, that's a very difficult route and people are discouraged from angel investment because of that. So this is one solution to startups here in the region, is to tokenize the equity. And the tools, I wouldn't say again it's a perfect NASDAQ setup, but the pieces are there. So, and now this regulation, it allows, you could do today a tokenization of your company, that's doable. You set up an EVGM or in Switzerland or Cayman or whatever, but you have to target qualified investors. You cannot go retail, because retail then it's considered an IPO and you need to go a different route. But the regulations are coming. So again, if I look into what could be done in a year or two, yes, I don't know, I cannot put a timeline, but I think within the next 3 years, it will be accessible for startups to raise money from retail through tokenization in a proper structured environment, a mixture of crowdfunding concept and public offering. So, that opens up a huge, your incubation center all of a sudden is incentivizing the community, even the students could participate in a startup. So these things are happening now, and you guys are in the environment where you got to do the studies and you have to look at it. So if you look at it in a 2 years horizon, most probably things will be there, and that is a direction to take.
Because that is a win-win, isn't it, for both parties? Because everybody talks telephone numbers when they're talking investment, and they're arguing about 5%, 10%. We watch Dragon's Den and things like that when you see valuation of companies. But the bottom line is that the time element, unless you have an agreement, you can't get out.
Even if
it's fair, isn't it, for both parties?
Yeah, it's not easy. So for a startup, the exit is the second round mostly. And
yes.
Here, the second round, they put a condition that early ones, they don't exit. So the investors here, they don't like to do a cash out. So you're stuck as an angel investor, as a seed investor, you're there for the long run. While let's say in Silicon Valley, the VCs ask you to get out.
They pay you to get out.
So then, you make some money and they make more, but you're happy to get some good returns, and that creates that ecosystem. This is one tool that could maybe, solve it.
The floor is yours, people.
Guys.
Please ask any questions.
So you mentioned that you add KYC to the NFT concept, but do you think adding the KYC extra layer makes it much longer to sell the NFT further? Like right now, you can flip NFT within 15-20 minutes. If I add a layer of KYC over there, it can take much longer.
Yeah, you do the bare minimum KYC, which is the identity. Depends what you're doing. If you're doing board apes things, well, but be ready. Or at least sometimes build up the technology and don't enable it. Just be ready because things will go into a security. And when they say security, basically the regulators want you to have the identity of the person you're transacting with. So that's the bare minimum, which is the identity proof of the person. And you can use the zero knowledge proof concept where I don't know the person, I'm just storing their, not you cannot even legally store their identity. You have to use a third party regulated. So don't take pictures of IDs or anything, that's not allowed. And use a third party. But when you design something in a big scale, yes. If you're doing trading of NFTs, that's a different story. I'm talking, let's say, you want to build up an open sea platform. Like look at Binance, they do KYC. If you want to create an account, if you don't have the KYC, you have limited functionality. So you need to design whatever you want to do, keeping in mind that sooner or later it will be required.
Because like we working like NFT concept over here. We're like accessing experience with that. For example, if the NFT token, you have certain experiences in Dubai. Starting with the supercars luxury because they're very crypto friendly over here. And second thing which I was the diamond space over here. So you can able to curate the market, only people who wants to buy those things.
Diamond?
Yeah. So we talked to like 2, 3 diamond merchants over here. So if you have the NFT, they will give you access to certain things. So
Straight for fast cars and diamonds.
Because
Nothing in
No,
between.
it makes
Because-
sense. I mean,
because
actually,
in
these are
Dubai-
the membership
yeah,
concepts.
because especially in Dubai, it's all about like exclusivity, and like these were like more crypto friendly people. Like the car rental system over here, accept really easily for
We're
us.
doing these kind of things. Yeah, like as long as it is an experience, but
Yeah.
I'm not buying the diamond. If I'm buying the diamond, you better take the cake.
Yeah. So basically, we're providing access.
Yeah.
With our concept, we first will have 3,500 NFTs. The holder can rent the NFT for a week using smart contracts. In return, like it's similar to Axie Infinity, the scholars
It's time
have.
to share, isn't it?
Just renting. Yeah.
So like Axie Infinity, you can rent your Axie to someone, you can make some money. So you can rent the NFT for a week or 10 days, you get USDT return.
Yeah. So, for example, the Axie Infinity, people have money, but they don't have the time. So what they do, they buy these Axies, which is like some weird funny characters, and you have the money, and then you rent them to somebody in Philippines, Vietnam, Nigeria, and they play, whatever they're doing. So you're investing in a team, and you share the profit. So that creates a different type of industry that did not exist. And what you're talking about, yeah, I know it will work. We're doing a few of these crazy projects. So yeah, access membership. These are the board apes, these crazy monkeys. That why they're sold because the membership. If you own one, you could participate in a gathering. You have an event. You have an access. Yeah. So as long as this is an access, but if it is owning or buying something, you got to be prepared for. So for access, yes, it's an experience. But just generally speaking, I mean, again, don't take whatever I say as it's just a discussion here. If you want to build up a platform, see regulation is coming. It's the regulation slows down things, okay, but it will open a bigger market. So it will slow it down a little bit, but then it will just create a much bigger market than what it is today. So these things fine, but if you want to sell anything, you better take and don't do KYC yourself.
Okay. So we started like with the decentralized identity, DID over here. With like that, one of our ideas, the holder need to be like a decentralized ID system, but that's not.
And I'm guessing you don't have a company behind these things,
Yeah.
right? You're doing it without a company.
Yeah.
Okay.
So, as you said before, we are on the Web 3.0. So, and as you said, we have the element of value to any information we give right now. So, any property we own, any asset we own, we have something called a deed on it. That's how naturally we do. We buy land of property. Till now, almost every country we go, we get a deed, a paper that signifies this belongs to us. Or if we buy an asset, we have something of some same sort. So NFT is something of a perfect technology to replace all of this. Such as, for example, if we buy an asset, we have an NFT. It's a non-fungible token. It's something which we can say this thing belongs to someone. So, sir, do you see a future where almost everything from land ownership to property, instead of deeds and contracts, we can go to something such as NFTs and smart contracts, where the element of digitalization is on a next level, that it makes business processes much more easier to handle. For example, if we want to sell a property, we don't have to go through that extra element of verification. It's much faster with element of digitalization over it.
Yes, but see, the pure decentralization doesn't always work because a land you could register it in the blockchain and you say I have an NFT proving that I own the land, but if a government doesn't confirm that,
yes, sir.
So for this to work, the governments and Dubai is a perfect place because the government is forward looking, and so the government is changing their system where they're using this technology to create these title deeds. So the different type of assets, behavior is changing. So real estate is like something you cannot even think unless if a government does that.
Yes, sir. So the question is, will a government do that?
Yes, they are doing it actually. Here they are doing it. Now in places where they don't have land register, like in Africa, they are jumping to that technology instead of building the traditional one. So yes, governments are doing it, and once the government build the title deed on a blockchain, that will allow the fractionalization. Because today, if they want to give you a title deed to 100 people, it's a nightmare with the current technology.
Yes, sir.
With the blockchain, they can give you 1 million, 10 million, doesn't matter. So yes, it's happening.
Yes, sir. So, sir, if we go to such a thing, we've already placed our infrastructure and technology in such a way that we're able to do it now. So the question arises, why is it taking so much time?
For which one? Are you talking real estate or something?
So, sir, why are we not implementing this on a larger scale? Why are we still moving towards traditional methods when we have an alternative that is sometimes
the concept of disruption generally, if you look at any disruption technology, the people who manage to do the disruption who are the less who are less prepared. So I'll give you the example with the mobile satellites. The Thuraya, Thuraya,
yes,
right? Before Thuraya, there was a company called Iridium. Probably.
Yes, sir.
Now, Iridium, they tried to create a perfect mobile satellite, and they're trying to sell it in cities like Dubai, New York, London. Now, what's the issue there? That mobile satellite works, maybe you have to be on the open, you cannot use it inside the building. You have to go outside, and it has so many limitations. Very expensive, very big. You go in a city like Dubai or London, they already have mobile. So their advantage of shifting to this technology didn't make sense. Now, Thuraya, what they did, they went to a place like an African deserts and the sea where they don't have mobile. And if all of a sudden from zero you get 1 hour a day, it makes sense. So countries that are well established with their legal system, with their technology, it's very difficult for them to move to this. Yes. Now you have to be very aggressive. So Dubai and UAE, number one, is as a young nation, has a very forward-looking, you have a leadership, could do that change, they will do it. It's more difficult in Europe, for example, and the US, because they already have established. What is going on, look into Africa. It's lots of things, because if you have nothing, anything is good.
Yes.
So this is where the progress is moving. So if you as a startup, you want to do something, I would really highly, like social media, Asia, Latin America, forget Europe and the US, highly competitive, slow growth, already everything is there. You go to Africa, like Axie Infinity made sense because if you're sitting in a village in Philippines, you make $5 a day, that's good money. You make $5 a day here in Dubai, it's a waste of time.
Yes.
So the target is very important. But things are happening, and we are definitely in a place where things are moving faster than, so it will. Governments are moving into this technology. The technology itself is maturing, as you know, so it's lots of work.
Yes. Yes.
Is that answering you? You're doing with tokenization of assets, or is that what
sir, it's part of a research I'm working on.
For what type of assets?
Sir, basically, I've been working on this research paper. Not assets as much. For example, check. When we issue a cash check here in Dubai, we have a piece of paper which we sign, and that check can get bounced in a lot of ways. For example, that check will not hold a value if I make a change on it, or if I write with a different pen, sign with a different pen, all of this proves to a point that the check has been modified. But if I am to digitalize the check in such a way that I issue a token on the check is a public data. Means if I'm giving it to you, it's a public data. Anyone over there can just look at it. It's nothing that you can hide or secret. It's a piece of paper with the amount on it. So it is something that you can perfectly go over and tokenize. Hence, it's a small research work I've been working on.
When you look at that type of technology, your underlying customer, the banks, the central bank, they have invested hundreds of millions in existing technology.
Yes.
It does not make economical sense for them to move to a different.
Yes.
So you look into an area where that investment is not made. So if you look at any industry, so tokenizing small companies makes more sense than tokenizing big companies. Big companies already have lots of things in place. So why would they shift? So when you look at that, yes, it makes sense, always ongoing discussion like payment here, advice and checks. Why don't you make it monthly and, using, you have an infrastructure that is already in place.
Yes.
Now, these things, if you look into a country in Africa that doesn't have proper infrastructure, that could work. And look into what is happening with blockchain there.
Yes.
Because it's an empty place. Here you go tell the banks to change their technology, it's like, oh, sorry, hundreds of millions of dollars are spent on that.
Yes. So the idea when we started it was it opens up a new, let's just say, a perspective into money handling. For example, if you have a digital token and a common ledger, it allows us to check cash. Rather than replacing checks, it would be like a next dimension. So we have cash, DDs, checks, something else. So tokens. That way we can trade between companies together. And then we can trade interbank, etc., etc., etc. So then that is what we've tried to invent. We're working on it.
But your lesson of thinking about niche markets where there's opportunities rather than established banking, oh my goodness, I mean, the bigger the bank, the more the admin, and it's probably the one thing that's still, I can remember doing 36 checks to buy a car once, and it's the one thing that hasn't changed in Dubai. You still write all the checks, yet because this is a new country, and it's so far advanced in many ways, a bit like the internet. The best internet we ever had was when we lived in Budapest, because it was new infrastructure. It was lightning fast. When you think of the US, the UK, and established countries, their infrastructure is still the stuff under the sea, and some of the places you can't get mobile phone, but newer countries can skip traditional and go straight to digital. And that, I mean, that's where you're looking for.
Also, when you look at things, you need to go into multi-dimension. So you look at the bank, highly regulated. Even if a bank wants to do what you're saying, they cannot.
Yes, sir.
They have central bank, and if they pass the central bank, they have the EU, they have the US, they have the FATF, they have, you gotta look at it from what is it? It's beyond the technology. It's not like the banks are stupid or backward. They're not. They are constrained. So when you look at any business opportunity, what is the low-hanging fruit and where will it? Changing that maybe in the future will be there, but how? And everybody now, even the new banks concept, and that's gonna in the next 4 or 5 years more of new banks. But these are traditional banks within a digital framework, but they're still traditional. You are connected to a highly regulated environment in this area, so you gotta look into all of it.
Well, the time has flied. I don't want to take too much of your time, but we could listen for a lot longer. But as in our traditional coffee with CEO, we have one for you upstairs. But if you can leave us with one with your signature on and maybe a word of wisdom, that would be great.
A word of wisdom here. You have the whole wisdom. I don't know what to say about word of wisdom, but I just, you guys are in a very exciting place and exciting time, and I think you guys are doing wonderful here. And you have a very, because academia is usually not very progressive, and I guess you're doing a very wonderful job here, and you have that opportunity to take advantage of it.
Well, thank you very much for your time.
Thank
It's
you
been a
very
real
much.
pleasure
Thank
and
you.
a great experience. Thank you. Thank you.
Great, and best of luck, everybody.
Oh, doing another picture. Okay. Great, thank you.
Thank you.
Right, we need to swap numbers, old chap.
055, sir.
Hold on. 0.
Sir, I can come down.
Is it stopped now? Great.